They're accelerating work on a car, and they aim for a fully autonomous vehicle. That's according to a Bloomberg report. We have not independently verified that, but of course we're working on that.
The car could be released in 2025, which is a lot earlier than anybody would have otherwise anticipated. The car and the experience driving the car, that's not going to be what it is in 2025 and out into the future. It's going to be about the screen, the entertainment that you have when you get in that autonomous vehicle and just basically relax, watch, and consume various entertainments. That makes that unbelievably valuable. Not the car itself, but the fact that you control what those people in the car are experiencing. That's going to be huge for everybody. If I were Ford and General Motors, I wouldn't quit the business, but I would certainly spin off these EV divisions. I don't know why they keep them under those, shackled, if you will.
Sure. Rumors about an Apple-related car are nothing new, as all of you know.
No.
For the last, 5 years? We've been hearing reports of speculation about and talking about the idea of an Apple-related vehicle. What pushes this story forward today, again, reported by Bloomberg, is that Apple is accelerating its car work and aiming for a fully autonomous vehicle.
They've made like a very, very small handful of notable acquisitions, so they're not going to do that. There's only so much in dividends that they're going to pay out, and the buyback is already huge. They're spending tons of money in R&D. They're spending tons of money in CapEx with the new headquarters and a lot of things they're building around the world, and they still have too much money piling up. So I do think they need to think bigger. I think shareholders have been waiting for them to do that, and they have endless resources. Like there's literally no one else on the planet that has the resources Apple does until we start talking about sovereign nations.
Apple is working on an autonomous vehicle that would debut in 2025. And according to the report, they are making progress when it comes to an autonomous vehicle. Wedbush Dan Ives, one of the few analysts out with a note today, says we would assign the chances of Apple unveiling its standalone car by 2025 as 60 to 65%. Take a look at the AV plays, if you will. These are automakers or companies that are working on autonomous vehicles. We're talking about General Motors, Tesla, Ford, and then there's Aurora, which is also working on an autonomous vehicle system. When you look at all of these companies, they all are playing for autonomous vehicles, guys. But we should point out, 2025, there are a lot of people who sit there in the auto industry and say, we're not going to be fully autonomous in our vehicles by 2025. It's a nice goal, but they are highly skeptical that the auto industry, let alone Apple, will get there by 2025.
I want to put some context into the most recent reporting and the rumors around it and that 5-year target of when it's going to be available. Is there has been this persistent belief from investors when we hear these rumors that it's just hard to believe that Apple's going to actually do it. That's what goes on in the back of my mind when I think about Apple in a car. It makes a ton of sense, but just imagine actually moving around in an Apple car. Hard to believe. And that is what is notable about today. It is, in my view, the first reporting in the last few years that has some substance around the direction, this full autonomy first approach. That means that the initial Apple cars will not have a steering wheel in it. And separately, who it comes from, whether it's 2025 or 2030, this is about as big of an addressable market as you can get, and Apple wants to be a participant in it.
This is a huge undertaking. You've got Cruise, you've got Waymo, you've got Tesla, obviously. What's Apple's edge? Well,
their edge is hardware, AI. The head of AI, of course, from Google came over to Apple a few years ago. They have, call it 70 vehicles that have been moving around the Bay Area, and they've been doing testing. And this, maybe just to put a finer point on behind, Apple is, I guess, light years behind when it comes to, infinite years behind when it comes to building cars. There's no comparison. But AI, which is really the substance of autonomy, on that front, they're doing really well. The benchmark right now is Tesla. When Apple, and you stack Apple up against Tesla in terms of tech prowess, I think that they're probably closer than you think to where Tesla is at today.
It is GM. celebrating the grand opening of the Factory Zero, the company's all-electric vehicle assembly plant in Detroit. At the NASDAQ, its customer engagement platform, Braze, celebrating an IPO today. Jim, GM invested a couple billion in that plant rather than close it. The $7 billion or so that in the infrastructure bill for EV charging, and it will eventually be the new home of the GMC Hummer EV later this year.
When you talk about Lucid, you go to their factory. Rawlinson assures me that you'll see a lot more machine. You're not going to see unions. When you go to GM, you're celebrating the fact that union workers are doing something that's terrific. And what they're doing in Wall Street is gumming up the works. I mean,
when you talk about a company that just goes public at a valuation that's greater than some of the biggest traditional automakers that we know in this world, what exactly does that ring in terms of your mind about what's happening in the entire auto industry?
The key thing here Rivian is the most extreme example of this trend, having, as you said, only gone public last Wednesday, almost exactly a week ago today it priced, and its shares have doubled since, so its market value has doubled. That market value can only make sense if Rivian takes quite a lot of market share from GM and Ford. But the interesting thing is we're not really seeing the valuations of GM and Ford come back. 2 years ago, the total valuation of the top 10 automakers in the world, excluding China, so the top 10 global automakers, was about $680 billion. And now it's over $2 trillion. So it's tripled. The market value of the top 10 has tripled. And it's hard to see that the earnings potential of the very mature car industry has tripled. It's possible that EVs might be a bit more profitable in the future. At the moment, they're less profitable for most people. Ultimately, Tesla's valuation starts to make sense only if you think of it achieving its target of making 20 million vehicles a year in 2030.
This is a short-term trade. In the long term, I'm a big fan of EVs. I'm even a big fan of Rivian. And I think there's a lot of reasons to get excited. You got big backers like Ford and Amazon. You got Dan Ives, who said, and I agree with this, Tesla crossing $1 trillion in valuation changes the landscape, the total landscape of valuation in the EV space. 100,000 vehicles by Amazon. That's exciting. 55,000 orders, fully refundable orders, by the way, in the backlog. That's exciting. They're going after a market that Tesla has not been able to capture. The most popular vehicles in the United States are trucks. All of that's exciting. And you throw in the fact you got a $1.2 trillion infrastructure bill with $7.5 billion going towards charging infrastructure. That's terrific. They made their first truck deliveries just over, 2 months ago. And at the end of last month, the company produced something like 180 vehicles. And all of that said, and yesterday, we're talking about the third largest auto manufacturer on the planet, passing Volkswagen.
It's trading based on what its expected future value is, given that there isn't that much historical data to look to in order to figure out what the potential discounted cash flows would be in the future.
Yeah.
Is it risky to make any big bets surrounding a company like this in this current market environment?
You look at $140 billion worth of valuation, you say, what is this? There's probably a lot of people that wish they were on that Tesla train at $250, called it expensive at $500, called it expensive at $740, and even at $1,200 had reservations of participating. So you go at $140 billion of valuation. How much is that is just regret of not being on the Tesla train the first time? And how much of that is hope that you're going to catch lightning in a bottle the second time? And I don't think hope or regret are a good reason to value something that has great prospects. Don't get me wrong. It just seems like it got a little bit ahead of itself, and you're seeing the market reprice not only that, but Lucid and some other aspects of this market.